We know that none of the issues that drove gold here are being solved. So the likelihood of gold going much higher is still rather high, making the case that gold can go from here to maybe $7, $8, maybe even $10,000 over the next few years. We know that governments will continue to basically expand the money supply, and it's not only the US, it's the Europeans, it's the Australians, it's everywhere, right? The Chinese, of course, as well. Seeing gold doubling from here, I think, is a realistic scenario over the next 2 to 5 years. As I said, last bull market top in the gold and silver ratio was around 15. So you can make the math where silver should end. If gold is trading at 10,000, we have a 15 to 1 gold silver ratio. That's, of course, the best case scenario.
Silver is finally showing renewed strength after years of underperformance relative to gold. The metal began 2024 at $23.99 per ounce and ended the year at $28.91, marking a respectable 20.5% gain. However, 2025 has been far more eventful. In the first half of the year alone, silver has surged nearly 30%, reaching a 13-year high as it broke above the $36 level in early June. This breakout has been fueled by rising economic uncertainty, intensifying geopolitical tensions, and the resurgence of Trump's trade war rhetoric. The rally gained momentum at the start of June, with silver climbing steadily from June 2nd through June 9th. Prices are now nearing $37 in the US and approaching $50 in Canadian markets, signaling increased global demand. According to Florian Grummes, founder and managing director of Midas Touch Consulting, this rally, though delayed, has now confirmed strong bullish technical signals. He believes that a move toward the $38 to $40 range is likely in the short term, with a potential spike to $50 in more optimistic scenarios. However, he also warns that silver is slightly overbought, so temporary pullback should not be ruled out. Notably, a bullish crossover of the 20-day moving average above the 50-day last Monday has likely triggered high-frequency trading algorithms to accumulate silver futures, further accelerating the upward move. Grummes suggests that a sustained breakout could reignite interest not just from retail and institutional investors, but also from industrial users, given silver's integral role in electronics and green energy technologies. He also points out that a price surge could be amplified by supply constraints or even a short squeeze, especially if momentum continues. The key now lies in the longer-term technicals, the monthly and quarterly charts. These broader timeframes will be crucial in determining whether silver can return to the 40s and potentially challenge its historic highs. The next 3 weeks will be pivotal in shaping the trajectory for the second half of the year. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop.
Silver is trading at a 13-year high. It took quite a while. I've been writing in many papers that I expected a breakout over the spring, early summer kind of period. It came a little bit late this year now in early June. Gold is already in a consolidation, in a multi-week consolidation since 22nd of April. But here we are, silver finally breaking out above this strong and important resistance zone, 34, 35-ish kind of dollar, and quickly ran up $2 over the last few days. So it looks promising. In the very short term, it's going to be interesting to see. We have basically an embedded super bullish stochastic setup on the daily chart. So usually that should continue to run higher. But of course, at the same time, the silver market is a little bit overbought here. Typically, if you get these run-ups in silver, they should last at least 2 or 3 weeks, maybe 4 to 5 weeks. And the best case scenario, so to speak, would be that we're going to see silver running towards $50 rather quickly here. Of course, I don't have a crystal ball, so everything's possible. And we've seen silver breaking out at lower resistance levels and then just posting a 1 or 2 week rally in the last 15 months. So, I mean, generally, you should be always a little bit cautious with the markets. If we see a clear turnaround signal, it could be also that it comes back below 35. But I doubt it. I think we are in this breakout stage now. And I think the chances are very good that we're going to see a really nice breakout rally now towards at least 38 to 40. And then in the best case scenario, as I said, $50 in the short term. However, gold looks a little bit tired, which is totally justified. I mean, it's been a crazy crazy run up over the last 15 months since the breakout above $2,070 last February 2024. So huge run up. Yes, it needs to basically pause, breathe, take a little break here. However, we know that once silver shows up to the party, usually it means that the end of some form of rally segment in the precious metal sector is coming to an end. So that also means that if we see silver now really going nuts for the next few days and weeks, it probably means that we will see a little bit larger multi-month consolidation in the sector, generally speaking. The issue with silver finally shows up. Everybody has been waiting for it. It's been testing all in any patience that anyone had, and then finally it shows up, and it means actually that it's the final inning of that leg higher in the precious metal sector. So that's what it is. But yeah, I think we are in for a nice ride the next few days at least.
And do you think if we were to break the $50 level, that would shift how major institutions would be viewing silver as more than just a poor man's gold?
Yeah, I'm very sure this will happen over the next, let's see, say 1 to 5 years. I think we're going to see a breakout above $50 in silver, and I think we will see 3-digit silver prices. And of course, once you have a bull market, a rally, prices going higher, the perception of everyone and also of the institutions is changing. It's always the same. The markets, in the end of the day, are mass psychological phenomenons, right? So once people seeing an uptrend, they're starting to wake up, wow, I want to be part of it. And then they run behind the train, basically, or try to get into that market. And it doesn't matter if it's institutions or retail or wealthy private investors. It's always the same. So, I mean, the perception is already changing step by step, simply also due to the fundamental macro kind of setup. We know that this is like the 5th year of deficit in the silver market, and lots of future potential demand sources coming to the silver market, while supply sources are difficult to ramp up. Basically, no real new mine is coming online over the next 1-2 years. I think the setup is wonderful for much higher silver price down the road. And of course, we're going to test at some point this $50 level for the 3rd time in the last 50 years. Normally, in such a long time frame and such a strong resistance, I would be surprised if it can slice through and directly run higher. Okay, normally you would expect a run to 50, maybe touching it and then pulling back and going into that multi-month kind of correction or consolidation kind of period, which I described before. But of course, I mean, once this train has really started, I mean, go back in the 1970s, from 1978 to 1980. Silver ran from $2 to $50 without really looking back anymore. So that's also a potential scenario. What do? I mean, you keep your physical silver, obviously, right? You keep stacking, you're buying, and you hold it, because I think the $100 level is certainly a very realistic price target over the next few years. And if you compare where the gold-silver ratio has topped in the last bull market of the 1970s, around 15, you can make the case that at the end of this bull market in a few years, silver might even touch $300, $400, $500. So for a physical investor, it's nice to see if silver touches the $50 level. There's no reason to sell. And yeah, you just keep holding and stacking. I just laid it out with the gold-silver ratio. Gold is trading around $3,300 at the moment. We had an apparently short-term top in April, but it's still holding up well above 3,000. We know that none of the issues that drove gold here are being solved. So the likelihood of gold going much higher is still rather high. We also haven't seen like a complete euphoria stage, which is typically the end of a bull market. We haven't seen that. Making the case that gold can go from here to maybe $7,000, $8,000, maybe even $10,000 over the next few years, I think it is a realistic scenario. We know that governments will continue to basically expand the money supply, and it's not only the US, it's the Europeans, it's the Australians, it's everywhere, right? The Chinese, of course, as well. So seeing gold doubling from here, I think, is a realistic scenario over the next 2 to 5 years. Let's say it goes to $10,000 for the math to be easier. As I said, last bull market top in the gold and silver ratio was around 15. So you can make the math where silver should end. If gold is trading at 10,000, we have a 15 to 1 gold silver ratio. That's, of course, the best case scenario. In the top of 2011, the gold silver ratio topped around 35-ish, which still would take you to round about $300 silver if gold reaches 10,000, right? We know in the ground you will find probably 10 to 11 ounces of silver for every ounce of gold, right? If you talk with the big mining companies, they will tell you, well, we mine 7 ounces of silver for 1 ounce of gold, which is unbelievable where the market is trading. I mean, we've been trading at 100. Now it's coming down. It came down to 92-ish, the gold-silver ratio, but it's still completely away from the reality in mining companies getting out of the ground.
Over the past decade, industrial demand for silver has surged, primarily fueled by the rapid growth of photovoltaic and green technologies. However, one often overlooked factor is the expanding arms industry. The ongoing war in Ukraine, characterized by drone warfare and missile strikes, has driven up the need for electronic components that rely heavily on silver. As Europe shifts its political discourse toward increased defense spending in anticipation of potential conflict with Russia, demand for silver from military applications is likely to rise significantly in the coming years. Florian Grummes emphasizes the long-term potential of silver, particularly in comparison to gold. If gold were to reach $10,000 and the gold-silver ratio reverted to historical norms, such as 15-to-1, silver could trade anywhere from $300 to $600. Even using a more conservative ratio of 35-to-1 would still imply a silver price of nearly $300. These projections highlight the potential for exponential upside in silver if broader macro trends persist. UBS maintains a core recommendation to stay long on silver, particularly given the metal's bullish setup and favorable option volatility. UBS expects the gold-silver ratio to fall below 90, thereby enhancing silver's relative attractiveness compared to gold. With both industrial demand and speculative interest aligning, silver appears positioned for a structural re-rating. Let's get back to the interview.
Well, I mean, look, now silver is showing up, so that is also a little bit of a warning signal in the short to midterm for gold. As I said initially in the beginning, it looks a little bit tired here. We've seen this top at 3,500. It was a wonderful, relentless, crazy, euphoric rally into 22nd of April. And since then, gold is kind of like trading sideways, one level lower, so to speak. So we've seen it basically trading back and forth between 3,120 and 3,400 and something to the upside. So that's a $300 kind of price range. And it dropped hard a few weeks ago and then also recovered rather quickly. We have a sell signal on the weekly chart, so I assume that this whole consolidation will continue. I have been writing in various papers that I think it's going to be a consolidation on rather high levels, most likely staying above $3,000. So far, that's what we are getting. We know that June is a rather challenging month for the gold price. Usually we get an important turning point somewhere in end of June or during early mid-July. And then we get a nice summer rally for the metal prices. It looks to me like gold still has some more corrective work to do. Silver has taken over now, so I would not expect too much from gold. Most likely volatile, sideways, back and forth, confusing everyone. Also gold, after this super clear trending higher, now it's a time where like everybody needs to be confused, I guess, so that the market is ready for then the next leg higher. So if gold can find maybe a double bottom around 3,100 or 3,150-ish in the summer, that would be perfect. If it just meanders between 3,200 and 3,400, it would be also fine. What I want to see is an oversold weekly chart that would basically give me the confidence, okay, now we have the setup for a nice new rally that can last at least a few months and taking us back to the new all-time high. We also have open gap at 3,420 something, so there is a trajectory towards the upside. But what we've seen over the last few days especially is the Chinese are not really buying at the moment. So whenever I wake up in the morning, I see what happened in the Chinese or Asian trading session. And you can see like there is some buying, but it's not so strong like it used to be a few weeks ago. So probably they're just taking also a little bit of a pause and a breather here. But again, I don't think that we're going to see gold crashing here drastically below 3,000. Not at all. I think the worst case would be a quick dip below 3,000 just to shake all the weak hands, everybody who bought into late and is emotional about their gold investments. But that's already the worst case. So I think for a few more weeks sideways, maybe we see 3,200 again, but overall trajectory is still to the upside. And then I think we're going to see a nice summer rally. And that's going to be telling. If we're going to take out the all-time high at 3,500, I think we can be bullish for the rest of the year. If not, we might have to be a little bit more patient. But the next price target at $4,000 is activated, and I assume it will come over the next, let's say, 6 to 8 months. I'm not buying gold here at these levels, to be very clear. So I've been buying recently silver and platinum. I think those are the two metals who are now catching up and who are still extremely undervalued. Also, if you look at the gold-platinum ratio, it's insane. I remember when I started as an investor in the sector 25 years ago, I mean, platinum was at least double the price of gold, So there's a lot of catch-up for silver and platinum, and we talked already about this. So that's where my focus is in terms of purchasing and accumulating more right now. But I would be a buyer of gold again around maybe 3,000. So my focus is on silver and platinum here. Usually, I mean, we are in an exponential curve in this whole bull market, also in the fiat money expansion. I don't think we have to wait 10 or 15 years for that. I think it's going to be within the next 2 to 5 years, most likely. So things accelerating. Yeah, I think 8,000 is realistic in 5 years, probably faster. Probably much faster. And the reasons for it, the drivers for it, I mean, in the end of the day, people are losing confidence into society, into the financial system, into their pension fund kind of structures, into the markets, into the currencies, in the fiat currencies. And so they need to find something that gives them some form of trust and stability. And that has been always gold for the last 5,000 years. Obviously, we are in a bull market. Once something goes up, more people become aware of it, and then more people chasing it, which intensifies the trend, which then creates more people who are becoming aware of it. So it's the normal pattern that we're seeing here. And I assume with volatility and with pullbacks along the way, but this is what's going to play out over the next 5 years. And I mean, the debt situation in most of the Western countries is so devastating, and there will be no other way than expanding the fiat money supply in the end of the day. That's going to be the big driver. Geopolitics, I think, is the main thing. So far, since the Hamas invasion in October 2023, it has been very supportive for gold, the geopolitical mess in the Gaza Strip and in Israel, than any other geopolitical mess, like more bombing in Ukraine or attacks in Russia, whatever it was. But of course, if we get a really devastating, dramatic increase in the military activity between NATO and Russia, for example, I'm not sure if that would be helpful. I think that's the biggest risk. I don't see it immediately, but it's obvious that unfortunately the warmongers are still overall in charge of things, and that would probably be the biggest risk. I don't see a stock market crash here. I think markets have nicely recovered since this little crash in late March, early April. We are probably getting closer to the typical summer doldrum kind of situation for the markets. Just understand, most of the investors in the markets are people with families, with a job. They take vacation in July or August. They want to hang out with the families. And then they have low volumes. And then, of course, your boss in the company will tell you, no, you don't trade as risky today because there's not enough volume. So automatically, the whole market volume, trading activity, everything calms down over the summer months. And it's been the same for years. And that's why you have this famous sell in May and go away. Generally speaking, summer doldrums, most likely for the stock markets, things will calm down. That doesn't mean that you can have sharp moves and crazy volatility, but overall less activity, and usually you get also a pullback in the stock markets. 5 to 10%, most likely we're going to see something like this until autumn, which also will affect Bitcoin to an extent, I guess. But we are not there yet. This panic crash in late March, early April obviously took out so many weak hands, and so many doubters have been created through that pullback. So many skepticism in the market that probably there's still some fool for a little bit further rally here. But let's say July, August, and then into September, I've been a little bit cautious for the stock markets. And that would fit for the metals to show up again. And then typically, of course, everybody knows that pattern, but usually September, October, you should get a nice entry opportunity into the stock market for the year-end rally, which then again might create a little bit of pressure for the metal sector. So that's more or less like the roadmap that I have. But of course, we always have to be flexible and listen to the market and see what the market is telling.
Silver's impressive run in 2025 signals a potential turning point for the metal, blending both cyclical momentum and deep structural drivers. With its expanding role in defense systems, clean energy, and advanced electronics, silver is no longer just riding the coattails of gold. It's emerging as a critical asset in its own right. As both speculative and functional demand converge, the coming weeks could serve as a defining moment in silver's long-term narrative. Is silver on the verge of a sustained revaluation driven by its evolving industrial importance, or will near-term overextension cap its upward trajectory? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.